Bill Gates has a net worth of $111 billion, Warren Buffett $69 billion, Ray Dalio $18 billion, Carl Icahn $14 billion, and Bill Ackman $1.9 billion. You can say that billionaires got to where they are today by making good choices, saving money, starting a business, and innovating society. In this video, I want to analyze their investment portfolio to see what they're holding, what strategies guide their choices, and are there any trends that we can pick up. This is much different from my normal videos, but I learned some interesting ideas while doing the research, and I think you will too. Before we start, make sure to check out my other videos on the $10 billion Berkshire deal, the $2 billion Wirecard fraud, and the $100 million Joe Rogan deal.
We're not, in some defensive posture where we're mostly in cash or anything like that. The strategy that's been used on the investments is to be over 60% in equities.
Bill Gates is the wealthiest person on this list with a net worth of $111 billion. He made most of his money from Microsoft and grew his wealth even more from investing. You can see that Bill Gates has been able to beat the S&P index, and he's been able to recover fairly quickly after the drop that happened in February. To really understand why that is, we need to check out his investment portfolio. These 5 companies make up 80% of his entire investment portfolio, and Berkshire Hathaway itself makes up about 50%. The next largest holdings include Waste Management, Canadian Railway, Walmart, and Caterpillar. These companies make our lives convenient and simple, and many of them will not go out of business due to their massive size and influence. For example, Berkshire itself is a large holding company that invests into businesses like Coca-Cola, Apple, Bank of America, and more. They also own a network of companies in industries like insurance, retail, energy, and more, and the list here is massive. You can still catch many of the stocks owned by Bill Gates today at fair value because of the virus. And here's an expanded list of the top 10 companies held by Bill Gates. SDGR is a new addition to its portfolio. The company develops computational softwares for drug testing and chemistry. The share price of this company went from under $1 just a couple months ago to around $100 today. And I plan on doing a video about this company in the future, so make sure you stay tuned for that. For any investors out there, investing into companies that run your daily life might not be a bad strategy. I also noticed a trend in the stock market in which people are moving their money from tech stocks into safer, undervalued stocks like those owned by Bill Gates. In fact, one of those companies that are still slightly undervalued is Berkshire Hathaway, which is controlled by Warren Buffett.
Well, you just keep looking at the facts. You're looking at a business. That's the important thing.
Warren Buffett is an old school value investor who turned $5,000 at the age of 15 to $111 billion today. And he follows a set of simple principles that made this happen. He only invests into companies that generate more cash than it spends, buys these companies at fair value, and hold on to them for decades. Buffett has been able to beat the S&P index largely due to his large stake in Apple. Out of all his investments, Apple now make up 43% of the entire holdings, followed by Bank of America, Coca-Cola, American Express, and Kraft. Buffett purchased Apple back in 2016, and the company has been one of his best investments, returning about $40 billion in the last quarter. Apple has a cash reserve of $100 billion, and Berkshire itself has $128 billion. We hear about billions and millions all the time in finance, but to give you guys some context, Berkshire has the second most cash reserves in the world, and Apple has the fourth. The abundance of cash in these companies allow them to purchase smaller businesses at will, weather economic downturns, and grow by investing into infrastructure projects. All these companies here have produced extraordinary returns for Berkshire, and you can see the crazy returns from American Express, Moody, and Coca-Cola. Buffett purchased his stake in American Express in 1963, Moody in 2000, and Coca-Cola in 1988. I think the takeaway from Buffett is you want to buy companies that make more than it spends, buy them at fair value, and hold these companies for decades. What I have here is the 10 largest investments by Buffett, and check out my Berkshire video too to learn how the company works and their recent pipeline deal. Ray Dalio made his fortune as a hedge fund manager and is well known for his deep understanding of economic cycles. I recommend that you check out his video on the economic machine because of how useful it is in understanding the stock market and the patterns of the economy. But the takeaway is that the economy moves in cycles because of debt. Taking off debt will slow the economy down, and taking on more debt will accelerate growth. And the stock market tends to grow in the long term because of the cycle of debt that increases productivity. As an investor, Ray Dalio doesn't really invest into individual companies. Instead, he puts his money into indexes and ETFs. His portfolio has been able to beat the S&P index after the drop in February, mainly due to his diversification in emerging markets, gold, and bonds. The S&P index itself makes up 25% of his holdings, followed by gold, emerging market index, and government and corporate bonds. Value is really the key in diversification, and you can see that his strategy is to bet on the overall global economy and certain ETFs. You can see his top 10 holdings here, and many of these ETFs are solid in terms of return for any investor. Carl Icahn is one of the more interesting billionaires on this list. He started as a stockbroker and now owns Icahn Enterprise, which is a holding company much like Berkshire Hathaway. Icahn Enterprise itself invests into companies like Prep Boys, a car parts retailer, Trump Entertainment Resort, and ACF, which manufactures rail cars. His personal investment account is mostly made of Icahn Enterprise, along with CVR, HP, Herbalife, and Occidental. These 5 companies represent 77% of his entire portfolio. He doesn't hold stocks for a long period of time, instead he often sells them after a year or two. Icahn is a corporator who's known for his hostile takeover of mismanaged companies. He doesn't hold stocks for a long period of time, instead he often sells them after a year or two. He makes a profit by purchasing enough shares of a poor performing company to gain control, and once he has enough power, he drives up the short-term price of a stock by means of share buybacks, changing the management team, and focusing on short-term growth. As you can see, Icahn is more of a trader and not a classical investor, but he does show that you can be profitable either way. Currently, his stock holding has not been able to bounce back from the downturn, but there is still more room to grow in some of these companies. To be honest, we can't really apply his strategy since we can't really purchase a controlling interest in a company like he does. So I guess the takeaway here is holding on to poor performing companies is one of the worst things you can do to yourself. Right now, Icahn is stuck holding on to many of these businesses that are essentially worthless. There is a possibility that some of these companies might bounce back, and here's a list of the top 10 holdings for anybody who's interested.
Hell is coming, okay? And I felt, it's really, I've never had this experience before in my life. The closest I had was the financial crisis where I'm saying, things are coming, bad stuff's coming. But this was a feeling like I've never had.
Bill Ackman is the last billionaire on this list, and he's famous for shorting the stock market right before the crash and buying stocks right after the crash. Ackman has been able to stay close to the S&P index, and that has made him billions since he made money both when the market dropped and when it went back up. His long positions include Lowe's, Chipotle, Berkshire, Hilton, and Agilent, which makes up 71% of his investments. He purchased Berkshire for its large cash flow, Chipotle for its potential growth, Lowe's for their new management team, Hilton for its business model, and Agilent Technologies for its healthcare diagnostic equipments. The takeaway from his investment strategy is that sometimes it pays to be brave. In terms of basic investing, he purchased quality companies right after the crash, which is almost always a safe and sound strategy for the long term. You can see the full list of companies that he owned here, and you're gonna notice that many of these companies are younger companies compared to those of Bill Gates and Buffett. I hope you guys enjoyed this video, and let me know what other videos I should do. Make sure to like or subscribe if you learned anything from this video. Yeah, that's about it. Thank you guys so much for watching, and I'll see you guys again next week.